It's a scary time for the economy right now. It reminds me of 2020 whenever COVID started taking over. And like every financial downturn or going into a recession or whatever, people start to panic, fear gets involved, and the stock market's about as reliable as Social Security benefits. Everyone is worried about their retirement portfolio. Everyone is worried about what they're going to do, how they're going to make ends meet whenever inflation's out of control, all of these things. I know we've personally lost over $20,000 in investments in the last couple months just because the stock market's taken a turn. So let's talk about what we can do during times like this financially. We'll talk about 6 quick tips on investing, and then towards the end of the video, I'm going to give you 6 tips on actually managing your money and daily living. Let's get started. Please don't forget to subscribe. We publish a new video every week on money, minimalism, travel, family, different topics like that. So like I was saying, we've personally lost over $20,000 in the last few months because of the financial downturn. Granted, that's all in stocks, so you don't technically lose it until you sell it. That's a good thing to remember during times like this. It's not always a good thing to remember whenever you're buying penny stocks. Don't think of it as, I'm not going to lose money until I sell it, and then it goes to zero, which penny stocks often can. But in times like this, it is important to remember that you don't lose money in your investments until you sell. So usually you just have to ride the wave and then you'll come back from it. But right now with the stock market, for example, people are being fearful. Warren Buffett says to be fearful when others are greedy and greedy when others are fearful. And what he means by that is the best investments often happen during times like this. This is when you should be looking and potentially buying if you can afford to. It's definitely not whenever you should be selling, and it's definitely not whenever you should be moving a lot of money around, especially in your retirement portfolios. It's typically this kind of thing, even if we go into a recession, whatever, it's just something we have to ride out. But more than likely, you're more concerned with holding on to your money, maybe how you're going to spend money, if you're going to have enough money. You're more concerned with that than you are about hot investment opportunities because of this market. And we all have to pay for our daily expenses, even with these crazy inflation rates. So what should you do right now? Should you find the best investment opportunities? Should you pull all of your money out of the stock market and hide it in the basement next to the mountain of toilet paper and everything else you have stockpiled? Well, we're going to talk about investing first, and then we'll get into the practical living expenses side of things. And remember that we as Christians can respond rationally to things like this, and we definitely don't have to respond out of fear. Okay, so let's talk about your investments. First, stop looking at your investments, especially right now. Investing really is like a roller coaster. It's only dangerous if you jump off in the middle of the ride. When the stock market tanks, you don't own any less shares of the mutual funds or the index funds or the individual stocks that you own. They are just worth less. They're not worthless, they're just worth less. You just have to wait it out. As long as you're not investing in any sort of crazy risky thing, you just really have to wait it out. And a lot of people want to pull their money out of the market because they think, well, if the stock market tanks, then I'm going to have my money out of the market. But the stock market crashes fairly regularly now, it seems like. I mean, it just crashed because of COVID, and it's in the process of doing so right now, pretty much. But the good news is that if the market did completely tank in the US, it would probably have a similar effect on the global economy, so your money wouldn't be safe anywhere. Wait, that's not good news. No, it's not good news, but it's also not going to happen. So why are you stressing yourself out by watching the market like a hawk? The market is a tornado right now, and I'm pretty sure hawks stay away from tornadoes. But it is going to be okay, I promise. If you're still feeling completely stressed out, let's break that stress down. What's the worst that could happen? I know, famous last words right up there with hold my beer and watch this, but that's not how I'm using it here. I mean it literally. What's the worst that can happen? Anytime you're really worried about something, one thing you can do is think about what's the worst possible situation that could happen? What's the worst that could come out of this? And then accept that. And once you've accepted that, then you know that even if it got to the worst case scenario, you know what that is and you've accepted it and you'd still be okay. And honestly, you would. If you accept the worst, reality will not be as worrisome. And it's highly unlikely that the stock market's going to completely collapse and that all of your retirement is going to be worthless. If it did, all of our money would probably be worthless. And once again, it's unlikely that's going to happen regardless of what a lot of YouTube videos are probably out there telling you about with the global or the national collapse of the dollar or the stock market. There's really no reason to get involved in that. I mean, you're just going to get a bunch of gold and just huddle around your gold. Yeah, I don't think it's going to go like people think it's going to go if everything were to collapse, but it's not going to, so don't worry about it. But let's look at that. Worst case scenario. What if the entire global economy collapsed? You'll be fine. I'll be fine. It would definitely grow our faith in God, It would have to. We grow the most during the worst times, actually. But remember, that's the worst case scenario, and it's very unlikely that that's going to happen. But go ahead and accept it. Accept it. That reminds me of the quote by Mark Twain where he says, "I've had a lot of worries in my life, most of which have never happened." I think we all feel that a lot. So if you are stressing out, you can accept the worst case scenario, talk to God, read your Bible, pray, meditate, just try to calm yourself down. And if you're actually really stressed out, go read Dale Carnegie's book, How to Stop Worrying and Start Living. That's a really good book on worry in general. I've used it during the most worrisome times of my entire life, and it has helped a lot. Staying the course. I want to give you 6 quick points on investments, and then I'm going to give you 6 quick points on managing your money in just a minute. So remember these 6 things whenever you're thinking about the stock market right now, or anytime the stock market is out of control or unpredictable, more so than usual. It's never really that predictable. Number 1, don't start buying stocks if you know nothing about stocks. Number 2, you never know how high or low a stock will go, and it can always go to 0. Number 3, focus on what you can control, consistent and diverse investing. Number 4, chasing returns is a losing strategy. Stay the long-term course. Number 5, always buy stocks based on the company, not the stock price. Number 6, don't forget your long-term plan due to short-term news. If you're using dollar cost averaging, where you put the same amount of money in an investment every month, like say you invest $100 or $500 or whatever into a retirement portfolio, or even a taxable fund, if you're putting a set amount every month, that's one way of dollar cost averaging. And basically what that does is it buys more stock whenever it's lower and the prices are cheaper because you're still putting the same lump sum of money in, and it buys less stocks when the prices are higher because you're still putting the same amount of money again. And that's exactly what you want to do. That's the closest you can actually feasibly get to buying low and selling high. So all of this means that when the market does come back, you'll have quite a bit to show for it if you're still regularly investing in those S&P 500 index funds or your 401k or TSP, whatever the mutual funds you have going on. Keep investing in those regularly, and whenever it comes back, you're going to have a lot more money. Yes, we've lost the $20,000 in our portfolio, but we've also continued to buy as it's been low, and we've actually increased our buying a little bit. So when the stock market comes back, we're going to have, threefold or fourfold probably what we've had in however many years. This isn't a math lesson. And another rule to remember when it comes to investing, the best thing to do in investing when you're not sure what to do is nothing. Don't do anything if you're not sure what to do. So there could be some opportunities out there right now to buy some stocks at a reasonable price, but don't worry too much about that. Just stay the course. This will be over soon enough, whether we go into a recession and come out of it or not. Just as a side note, if you are interested in trying to find opportunities right now, that's what I typically do during times like this. In March of 2020, whenever all the cruise and airline stocks tanked, I started buying cruise and airline stocks. I recently sold one of those stocks at a 300% profit. At least 2 of those stocks have gained over 1,000%. And then all of the other ones have at minimum doubled. I'm not saying you should do what I do. I'm just saying I have money set aside that's called like a play fund, and that's exactly what I do with it. You may be listening to all this and you may be just nervous and thinking that you just need to know what to do about your money right now, and you're just worried and you're not interested in investing and play money and all this stuff. You just want to live and have enough money to live. But the stock market and the financial markets in general work in cycles, and they always come back, historically, at least in America. Plenty of people will tell you otherwise. You're going to see articles out there that say this is it. This is the time to sell all your stuff and to buy gold and to you'll see all the crazy nonsense out there. These are the same articles and videos that we saw in March of 2020 whenever everything was going crazy. So it's not unique to this time right now. It's going to happen every time because people want to try to profit off of it by selling their book or getting you to watch their videos about how this is the end, just like Y2K, just like COVID, just like everything else that was supposedly the end. So stop letting the news dictate how you feel, and definitely don't let it dictate how you invest. Again, just take a deep breath, open your Bible. I'm going to put some verses in the description below so you can kind of find some verses about worry and maybe some things that'll help you calm yourself down a little bit if you're worried about it. And I know I keep saying the worried thing. You may be thinking, I'm not worried about it. I'm just watching the video to get some more information. That's fine. A lot of people are super worried about it right now. So just know that and be mindful of that when you're talking to other people. Some people, anytime the stock market or the financial markets do anything outside of the norm, they start to freak out. It's okay to try to make them feel better. Okay, so managing your money. So how do you manage your money right now with so much uncertainty? We've talked about investments, but now we're talking about day-to-day managing your money. It's the same way you always should, with intention. Focus on what you can control. So finally, here are 6 things to keep in mind when it comes to managing your money and your daily expenses. Number 1, tackle debt and lower your expenses. The less debt and expenses you have, the less you are accountable for paying each month. Number 2, get or keep that emergency fund. COVID taught us the utter importance of an emergency fund. It also taught us that we probably need more in it than we thought. The goal is 6 months of living expenses now by most estimates. It used to be 3 to 6, and now the emphasis is on 6 months. Number 3, be careful with credit cards. If you're struggling and you don't have an emergency fund, you may be turning to credit cards. Be careful here. Cut your expenses in every possible way before you start creating more financial panic for your future. Number 4, actually start a budget. I did a video on how to use every dollar, or you can find a different budgeting app, software, spreadsheet, pencil, paper, whatever works for you. If you refuse to keep a budget, at least track your expenses so that you can see where you can and should cut spending. Number 5, cut spending everywhere you can. If you're struggling, at a minimum, you need to cut out entertainment and eating out. There may be other areas like the daily coffee or the snack that you can cut. The small expenses add up, but the good news is that the small savings do too. And number 6, consider a side job. Just like you want to diversify your investments, it's good to diversify your income. More income streams means more money, sure, but also more security. Finally, a bonus tip. The key to financial security is flexibility. What do I mean by that? I'll give you an example. We're planning to buy a house. We would like to pay cash for a house in the future because we hate debt and it's X amount of years away. That's not important, but we're saving to pay cash for a house. The way we're saving quickly is by investing, and we're investing in a lot of S&P 500 index funds, things like that, that are technically high risk or considered high risk. So what happens if it comes time for us to build our house and the stock market crashes before we pull our money out? Well, we just wait longer. If we have to wait an extra 5 years, that's fine. We've built that flexibility into our plan. The plan is, this time we're going to build a house, we're going to buy a house, whatever. But if the stock market collapses or something crazy happens with the money, or if we have some sort of emergency and we have to use that money for something else, then we'll just wait longer and we have a plan B, C, D, E. We have all these different backup plans of what we're going to do if that were to happen. Please don't forget to subscribe for more videos like this, videos on money, minimalism, travel. Also check out my book, Intentional Children. It talks about money and mindset. I'll put a link to that below. That is all for today. I will see you next week.